How's it going? Our morning stream here, Trade with JR, and we're going to talk about a little bit about Forex, US equity markets, and of course, the crown jewel. We're going to talk about Osiris Ragnarok, our automated Forex algorithm. Okay, so we're going to look to come Monday to Friday. That's the goal. Let's see how's everything go with the setup and the timing. Tomorrow, I may be actually a little bit 1 hour later because I'm going to CrossFit. I have to go to the box and train a little bit. So I'm your host, JR, of course. My full name, Jose Ricardo Jaén, but it's easy for the UK market to just pronounce JR or Coach JR. So let's dive into what's happening. The first part of the show will be just talking about, here's Larry. Our head of communication in Edinburgh. I don't think you're in Edinburgh, Larry. Where are you exactly? Let's see if I can. He has a microphone set. So first part, we're going to go into what's happening with U.S. currency pairs. Take a look at Bloomberg, see what's happening there. Then we're going to talk about U.S. equities. Mainly, let's focus on the indexes and what to expect. And why not talk about a little bit Tesla, Fisker, from time to time. One or other stock that you may want to look at. We're always happy to receive your comments. We're going to use some tools from the U.S. Randy Lindsay, one of the best traders I know so far. He actually developed and keep developing the Hawkeye traders tools. They're amazing, easy to follow, based on volume and momentum. And finally, we're going to look into the data. I want everyone to know we're talking about data. Research. So you're gonna see a lot of what they call simulation demo accounts. It's not about that. It's about collecting the data based on the pattern behavior of currencies in XYZ amount of time. That's what we're gonna talk about, and how you can put your hands on one of our service licenses that we offer. So rather than transform yourself in a trader or become that legendary investor like Warren Buffett, it's just about doing whatever you're doing now. Take some of your savings, not all of them, that's not what we're talking about here. Take some of the savings, all right, and leveraged. A lot of what we were going to talk during Trade with JR sessions, it's leveraged products. They are not for everyone, and it's a way, if you actually have the direction of the market, if it's the way to generate those explosive returns that you hear all the time, people, how they make money, how they actually live from trading. Some people, they have these big accounts, so they can trade with positions that are accordingly to their accounts. And that's easy. But when you don't have a lot of cash, then if you're willing to take the risk, then you're looking to leverage your position. And if goes well and the data indicates that we have a little bit of the edge, that's all you need, a little bit of the edge, all right? Then, of course, we can have that opportunity to make a lot of money. But remember, it's not about just quitting your job. There's also people that they love what they're doing. And the idea is just to prepare yourself for retirement. And why not? From time to time, if you have a very decent month, like any business, then you enjoy yourself, all right? So let's dive into the markets. Let's take a look at what's happening on Bloomberg. If we have any headline, Bloomberg.com. Let me share my screen here. Start sharing screen, okay? Entire screen. Yes, that's what I want to do. There you go. And we're going to go side by side. Excellent. So let me save these. And I think, all right, Trade with JR. That's the logo there. And let's see, we have follows on YouTube, Trade with JR. That's the information now. Let me share my screen and let's see if you guys can see my screen right now. I think you can. I just don't have the way. Let me see if I can go online and check how it looks on YouTube. All right. Trade with JR. See if we're live. Oh, there you go. Okay, perfect. Okay. So yeah, so basically, yes, you can. You can see my screen. I'm double checking on YouTube. It's perfect. There you go. All right. So the first part of every day's session, we're going to look into, like I said, U.S. pairs. Let's see where they are, what they're doing. Okay, and we're going to use our Hawkeye trader tools. I'm going to explain more about it. We're going to work with volume, and we're going to just have a little bit of direction what is happening. And at the same time, I'm going to look into Bloomberg.com. I already have it here. Bloomberg, and see if we have any nice headline to talk about. And just start a little bit with a bit of news from Bloomberg. They have this thing called the 5 things that you need to know to start your day. It's pretty good. It's pretty good. From what you can get for free from Bloomberg, it's decent. I like it. I read it all the time. I read the Asian session, European, the American, the US. It's a bit tricky though. I'm going to say that it's my least favorite, but still. And yeah, Asian and European, those are the ones that are the best. Now, let's take a look at this. And they have from their journalists, Tassos Vosos and Cormac Mullen. Mullen, he actually, I think he works for the desk from Tokyo. Let's see, not over yet. The coronavirus pandemic, an overreaching theme for markets in early last year, is not over yet, experts warn. What's the surprise? I don't get it. I don't get what is the surprise for everyone here. It's like we've been talking about the Delta variant, there are other variants, and the same ongoing story. And especially, look at what they're saying. Meanwhile, the UK is preparing a mass booster vaccination program as it plans to scrap mandatory vaccine certificates in England. And Israel is even eyeing a fourth dose. I think by 2022 we will be on the dose number 6, number 7. It's all right. I mean, we sort of knew this, and when you look at the big players, Pfizer with BioNTech, you look at Moderna, you look at Novavax, like there's no question. We knew this will happen. It should not be a surprise. And more than that, because their new narrative is the vaccinated versus the unvaccinated. All right, and I'm about to get my Moderna shot next month. It's the whole understanding that from day one we knew, right? We knew this was going to be like this. We just rushed in producing this vaccine, so it shouldn't be a surprise. It has been very profitable for those that look at BioNTech, especially BioNTech, Novavax, and Moderna. Moderna went all the way up from February last year, was trading at $25. Now it went as high as $495. And the way it looks like, it might easily get to 900. Why not? It doesn't mean that it will stay as a $900 stock. Probably would be a great short opportunity. But at the same time, it's just to give you an idea, it's not over yet. But as soon as we actually have that opportunity to, it's sort of over, like we conquer, if we get to a point where we conquer the coronavirus, then expect that massive boom in the different economies. Especially you want to be positioned in currencies, you want to be long, you want to start buying the pound. So whatever is happening now and all this talk about the inflation in the US or inflation worldwide because of the distortion of the supply chain, just keep in mind that at some point the UK will make a comeback, and that will be a great opportunity for you to be long the Great British Pound. Now, look at the oil climb as slow rebound of supplies in the Gulf of Mexico after the Hurricane Ida is helping push oil prices up to around $70. There's a climate change, it seems to be helping. It's not something to share, but it's something that is happening and we have to account for. The move defies the OPEC plans to restore output and a Chinese release of reserves. That actually was the trigger that pushed the US dollar versus the Canadian dollar up it was almost 100 pips. Yeah, it was 100 pips by the end of Friday's session. And it was amazing. And it comes because the Chinese, open their mouth and they say, hey, we're going to release reserves. And it could be a sign of things to come as Goldman Sachs see a significant rally of crude in the autumn. Well, there you go. Goldman Sachs saying there's a significant rally. That means that probably we're going to get 10 points. That means 10 points is $10. So from $70, we can see 80, and we can go even more to 85. All right. So we go to take a look at the charts and see what's happening with oil. All right. Now, The same story with the tax warning, same story. Scholz in Germany, they're hitting the polls to determine Angela Merkel's successor, and center left front runner Olaf Scholz is seemingly consolidating his lead. Good for him. And finally, this is what Cormac Mullen is interesting this morning. This is at the end of the five things that you need to know. This is how they structure everything. A couple articles that you can always take a look, worth your time if you're a student, if you're someone that wants to be informed about financial markets. Absolutely something that you have to take a time and went over them. The pound flip. Now, talking about currencies, right? And look at this. Investors have pulled the plug on bullish pound bets. It means that they don't think there's more there. There's no more in the gas. Net leveraged futures and options positions on the British pound flipped short for the first time since December. Okay, since December, according to the latest data from the Commodity Futures Trading Commission, the CFTC in the US. The pound so far is the best performing group of 10 currency year to date, up over 8% against the dollar, still in positive territory. So some degree of caution isn't surprising. Sterling traders are now weighing a weakening UK economy. For now, that's the way it looks. But remember, at some point, the UK is going to make a comeback, and you want to leverage that opportunity, right? And here at Trade with JR, we will guide you, we will coach you. It's not I will tell you. I don't need monkey see, monkey do. We want people to be empowered. It's time for you to take control of your financial future. It's not if or when. It's just you have to do it now. And if you think thankfully we won't have any other big crash due to COVID-19 for now. But you have to remember that if you look at the different recessions, so sort of market crashes, you have all the way back to 2000. That's the tech bubble. Then you have the 2008, 2009 great financial crisis. And the latest crisis was a sanitary, was not a financial or technological, technology related. It's in fact a sanitary. And then we just threw money at it. But we're still fighting with it because it wasn't money. Money was just to help people keep going because they were unable to get out of their houses and work. We still have a lot of people, not only in the UK, but also in the US, in Latin America and Asia, that they're depending on tourism, which is the service industry. And there's no way for you to do that online. The idea here that I want you to grasp, to take from this section is, make sure you understand this. We're in the age of ultra digitalization, whether you like it or not. This was the first friendly warning. It was a friendly warning from the universe, whether you like to believe or not in energy. But this is a fact. It's the first friendly warning for you to prepare yourself. This is not going to be the next one. Won't be friendly. This time lockdowns were at best a year. That was okay. It had the potential to be much worse. Now, it's not about for you to be in fear or live in fear, but it's for you to pay attention, wake up, open your eyes, and see what's happening. Because it may happen again. This is not the first time that we are challenged by a recession, market crash, of different situation that affects economy. But the only difference this time is that now we know that we're all very connected, and that you should not be taking for granted your school teachers, especially if you're parents. Don't take for granted teachers. You need them. We all need each other. That's very important. But what we look at this is, for now, those bets on the UK pound, they're easing. It should be a moment for you to learn exactly how it's happening. Why is this happening? This is a great piece of information coming from Bloomberg.com. And at the same time, it all depends on how the Bank of England, the BOE, navigates everything that is happening. Saying Boris Johnson, he has to, he's trying to do something that it's not attractive for everyone, right? Let's just finish with this. Economy. Again, signs of renewed hawkiness from the Bank of England. Aside from the recent disappointing GDP figures, go figure, right? Why they're disappointing. At the end of the federal government support programs this month, put in place to help people through the crisis, could also weigh on sentiment. Yeah, there's a certain level where the government has enough capacity to help, After that point, then you have to face the music, and for not for everyone would be nice. All right. And then here comes the cherry on top of the whole story. The announcement of high payroll taxes to help fund the NHS won't help dispel the suspicion that there are downside risks to the UK economic outlook. Well, so for now, it is what it is. But keep in mind, every time you ask a question, the answer that you are going to get is based on who you are asking the question to, who you're questioning, and that's the kind of answer that you're gonna get. So for someone that says, "Well, I have to pay more taxes to keep NHS alive," if you don't want to, give more, of course, because you're already tight, then it's bad news. But at the same time, this period of weakness can be translated in a massive opportunity to align yourself in the medium and long term in the pound. So once we cover the news, let's take a look at the charts. Let's just go directly to my trading view. That's a tool that any one of you can use. This tool is free. It allows you to do certain stuff with it when it's free. And if you pay, of course, you have more capacity to have more indicators. So what you see in front of you, it's the Hawkeye Trader tools. And let me just explain a little bit what it is. First, this dot, green dot, red dot is what we call the Hawkeye trend plus stops. That means when you're looking to invest, the question always is, one of the many questions is, okay, what do I buy? Where do I invest? How do I trade this? And then other questions will be like, okay, so how long I keep my position? And then another great question is, when do I sell? When do I sell, right? Because I bought it. It seems that I'm making money. Am I going to sell too soon? Am I going to sell in the middle of something? If I wait too long, am I going to lose my profits? How does that work? So this particular tool, Hawkeye Trend Plus Stops, is the one giving you that. Stay in, you're good. Or if there's a pullback, if you see something that goes up and then it reverses, uh, not necessarily means that it's changing direction. It means that there's a probability that it's just breathing, right? If you're running, you need to breathe and then you take a little bit of air and then you continue. Well, that's exactly the way it works for financial assets, right? Nothing, you don't want anything to go like what they call to the moon, right? Cryptos, because to the moon equals to the floor. You want an asset, same for currencies, you want an asset that slowly builds up. It's not aggressive in either direction, up or down, and it gives you the time to allocate your investment, your trade idea. So in this case, let's start with the dollar versus the Canadian dollar. What we're looking at as it's very interesting because we're looking for a big high, which, by the way, if we talk about the Canadian dollar, we cannot avoid talking about oil because currencies are divided by what it's not so much the underlying asset, but what does affect that currency. Of course, like I said, if we talk about the Great British Pound, we have to think about the health. How healthy is the UK economy? When we talk about Canadian dollar, the loonie, that's the nickname for the currency. When we talk about the loonie, then we have to look into what affects Canada. Yeah, the economy. Last Friday, they have great unemployment. It was reduced. Bingo. It pressured the dollar and it moved the currency from 126, that was the value, 126 to 125.80 estimated. Of course, things are going well, right? The economy is healthy. Let's take a look at that. And the US economy has been doing okay, pretty decently for the last months. I would say fairly half of the first half of 2021, sort of the recovery, the second half of 2020. And now it's just taking a breath. So obviously, the dollar strength, yeah, traders or investors looking to buy more dollars may slow down a little bit. It doesn't have to be a huge reverse right away, but it does in fact shows a slowdown. Okay, now fine. So what's happening after this reversal? Big point at 129.44. That's pretty. It's a big move coming from all the strength, all the way from 120. So between the first half of 2021, we're talking it moved from 120, the bottom, all the way to 129 and a half. That's almost 944 pips. Now, if you're wondering what is pips, and I'm going to talk a little bit, drop a little bit of vocabulary if you're new, because if you're a trader, if you're an investor, you already heard these terms. But what we want to do a trade with JR is just to get to those in the UK and share with you this education, these tools that have the potential to guide you in these great investment opportunities. Now, remember, we're working with leverage products. It's leveraged. I don't want anyone to get confused in what we do. Okay, we're leveraging our positions. So if you think about that, from that bottom, you have the opportunity to invest one standard lot. We're talking close to in about 5 months. Actually, look at this. It's 124. Let me take a look so you see this. This is the bottom. It spent a little bit of time the bottom, all the way from May of this year to June. So from June to where we are, we're looking at August, June, July, August, about, let's call it 3 months. So from this point to this point, let me just take the brush, point A to point B, we're talking about 944. Let me see if that, let me just double check how it looks on the screen. It does look good. Larry, I gotta tell you, man, it looks good. Greetings to everyone in Scotland, soon to be with you guys there, streaming directly from Edinburgh. We're looking forward to that opportunity as well. So we're talking about 944. Now, let me just actually, I don't think it's on the screen. Let me, wait a second. Let me just take this. I think here, 944 pips. And, oh, there you go. Beautiful. 944 pips. So from point A to point B, that's what it's going to look. Let me just switch screen for a second. And I'm going to just turn on. I don't know. Let me do something. I think when I cancel the screen, no one can hear my voice. So I think like Larry, when I move my screen away, when I turn it off, no one can listen. So I think what I have to do is just to expand the screen. I think I got it now. So I have to keep it on, and then I have to expand the screen itself. Yeah. So yeah, I think that's what I have to do. It works that way. So I reduce my screen, and then so you can still hear my voice. I don't have to shut down my screen. Just move it away a little bit. Yeah, perfect. Thank you, mate. Excellent. So so this is point A to point B, and we're talking from May, let's say August, because I give you a couple of times around 120.08, the dollar Canadian, for you to jump in. And when you do that, you have a total accumulation of 944. So just judging as not a trader or investor, but just someone that doesn't know much about currencies, is just buying the risk, buy the 120 level with one standard lot. For that, you probably need 3,000 pounds, 5,000 pounds. Okay. And then from this point, what it does is then you're looking for, and I think we're going to do this, Larry. I'm going to actually just share with everyone. Let's go and pick a simulation account for our friends from FX Pro. And what I'm going to do, just click here. I'm going to explain exactly how it looks and the potential profit without doing much, because it's not that you're going to just quit your job. It's just how you maximize an opportunity. Okay, that's what we want to do. So let me take a look at this, guys, and let's get a simulation account just so you can see the potential. So MT4, the max level, I think they would probably give you 200 to 1. FX Pro is in Cyprus. Let's open this simulation in Great British Pound. Now, remember, this is just manually. This is where you actually see an opportunity. You position yourself, and this will give you an idea of the potential that you have when you have your trading account, your investment account, and your trading currencies, and you're leveraged. Okay, remember, there's risk involved, right? So I think the information will come, right? Let me see, get my email. And again, this is just to give an idea how it works potentially. And also we'll talk to everyone about the risk, because again, I will keep repeating myself, we're working with leveraged products. There is risk involved. As we pick the direction correctly and we stay in the position, we don't rush ourselves, we stay in the position, then you can really welcome a decent profit. Okay, there you go. Again, for all purposes, this is just a simulation account, remember? And what we're going to do is just to bring that particular case of the US dollar versus the Canadian dollar. All right. And let me just remove this indicator. The weekly. Okay, perfect. I think we can see it better here. All right. So it was about 900 pips. Let me show you. From this level, okay, about 900 pips. Let's not call it 944, just 900 pips. That's percentage in point increase when you're working in Forex. So if you trade one standard lot with a 3,000 pound account, and then you buy it. So from this point, we just go up 900 points to show you. 900 points, it's 900 pips, somewhere around right there. Now, if you were to take that same trade back in June, back in May, and stay in the position for about 3 months, that's 90 days, only 90 days, and you maximize the whole thing, you take home 5,150 pounds. I repeat, 5,150 pounds with a 3,000 investment. Now, what could be the risk potentially for something like that? You have to think you're looking for at least a 50% risk. And again, this is manually, and this is because of the size of the capital you have. If you have $3,000, 3,000 pounds, for example, yeah, that's 50% of your risk. But if you have a 10,000 pound account, or if you have a 5,000 pound account, you no longer have a risking 50% of your account. Now, remember, you're not looking to be a trader. You're not looking to live from your money right away. You first want to build it up. That's what you want to do. So again, this had the potential at the time to give you a 5,150 pounds in profits with a initial investment account of 3,000 pounds. Again, more than a trader, you're looking to position yourself. And that was the opportunity. That's where it was. Now, when we judge what's happening, okay, if we take all out and I judge what is happening with the dollar Canadian, we definitely want to see some strength in we want to see some strength in oil. Now it's fighting. It's above this orange. You can see this is a moving average. This is a 20 exponential moving average, and that is giving support to the currency. All right. So we have some expectation that if we have a break from the 126.98, then we have this opportunity here all the way up. Okay, all the way up to 127.24. If there's a failure in this level, well, we have a trend line. We have 2 points. This trend line, we just have to draw it. You take and add the dots. You have 1 point, 2 points, and that gives you a trend direction. And last week, we have this move back to 125.85. Of course, why happened? That happened because, obviously, because the data coming from the Canadian economy was good. So that's actually what happened, right? That's actually what happened. We had a good data coming from. It doesn't look that good. The screen. Let me see. Still, okay, perfect. Let me just think. Just trying to look. The screen doesn't look as clear as it should. Okay, let me try again. Huh. Let me try something else. Let me just bring myself back and let me go back to the screen. Because it looks like it lost resolution, Larry. Or I don't know if it's because I'm watching it on the phone, but it looks like it lost resolution. Okay, let's see now. I don't know if it's no. Okay. And I think now we have to trying to do this together again. Okay. No, how do we do this? How do you have the two screens again? Okay, perfect. Now we have the two screens. Now I can go and try now. Yeah, but it's something like it lost resolution. There's something with the resolution, Larry. Something, it's off. Something just doesn't work correctly now. It's a bit fuzzy now. Yeah. I don't know. Just trying to understand what it is. It was good at the beginning, and then it went fuzzy. I'm not sure what it is. Yeah, let me take a look. It has high definition. Yeah, I see it, but it doesn't change. It hasn't. Yeah, it must be your connection then. Yeah. Oh, well, that drama of the internet connection has been for a while, so it's not going to change. There's nothing else to do with the internet. That's I cannot get more data. That's all we get. I don't know. We have to work with this. There's no other way, man. Sorry. Okay, so let's just go back to where we were. That's the thing with this technology. Let me see if I can get back to chart. Okay, but it does look very bad. It does look very bad. Okay. Uh, yeah. Yeah, but it's also for the audience. When we have more audience, how's it going to look? That's the question. And how we can keep it up. Um, hmm. Let me think. Let me think. Let me see if I stop sharing screen. Okay. Stop sharing screen. Now we go back to sharing screen. Split this. Let me see if we can get it back. The quality. Not at all. Doesn't pick. Oh, that's all right. We're gonna continue, guys. Just we have to figure this whole thing of the quality of the streaming. Now, like I said, we are in the middle of this opportunity. It seems to be long in the short term. We don't have yet this breakout of this 127 level, and as long as it's the dollar versus the Canadian dollar, as long as it keeps trading under the 127 level, then I'm cautious for another leg up, especially because we have a massive rejection of the 127.60 last week. That's something to keep in mind. And also, there's a little bit of the volume here, volume that seems to be more selling pressure, and that makes me think it twice. So if we're talking about the dollar versus the Canadian dollar, at the same time, we need to talk about need to talk about oil. So I'm gonna go with the CFDs on West Texas Oil. West Texas Oil, and this is what is, it has my attention. If you look at West Texas Oil, actually in the short term is trading above the orange line. That means that is bullish. So it's a little bit of debate. Okay, I want to buy dollar versus Canadian dollar. Looks bullish, but the underlying asset it's is doing well. Okay, so oil's going up. The dollar Canadian is still fighting. Seems that the dollar still has the upper hand. So what do we do? All right, so what do we do? If we have a breakout of this level, this is the previous level at $70.74. Then we have a continuation to $74. And this might be what Goldman Sachs is saying. Get ready. There's a lot of stuff happening with Hurricane Ida. Then you have challenges in the Gulf of Mexico. Look at an opportunity for a continuation. We definitely see a lot of volume coming in at the $67.90. We have volume coming in at this level, $69.53. And if you look at this at the bottom, this is what we call these green dots. This is called roadkill. Let me take a little bit of water. This is called roadkill. And roadkill is our tool. Like a lot of people like, hey, buy here, sell here. It's not really buy or sell. It's green. We have a shift in volume and momentum. That's what is happening. There's a shift in that. So that's why it's going up. But at the same time, with volume tools, we see that it's picking up and it's a buying volume. Someone wants oil, West Texas Oil, trading above that particular level. That level was the $67.70. Now we are trading at $70. Why? Someone bought the dip. And you can see, if you take a look, you see how it went from $62 all the way to 70. Now it made a couple pullbacks. Pullbacks mean it's it's breathing. That's what it's doing. It's breathing. It's doing it at 67.25, at 67.70, and 67.69. Now finally, after three opportunities, I have to move the chart and see if it works. Okay. then it's finally pushing higher. Now, if this is pushing higher, then we have to think that we still have an opportunity to buy the dollar Canadian. All right. Now let's take a look at the euro versus the dollar. A different story. Now we have this break. We have this massive break, and it comes all the way from 119.08, almost during the first week of September. Now we're pulling back. If that's the thing, if we really believe there's an opportunity for things to just be more stable, then look at what's happening. We are now using trend Fibonacci to define the different levels where we have this moment where the currency is breathing. All right, it's pausing. In that case, see how it lands around between 38.20 and the 50% Fibonacci. So we may be looking to be a buyers between this level, the 61.8% level. That means that we still have room to see the euro move a little bit lower, 117.59, okay, to this level, this area. If I take a look at what's happening on the weekly, we still definitely see the euro's not at its best. It suffered a massive challenge trying to break this level, the 118.80. You can see that because we have, take a look there. You have the orange moving average. This is an exponential moving average, means we have more data. And now it's pausing here. So if we want to push, we need to recover fairly soon. We need to recover the 118.14 level to the 118.20 level for the euro. So there's a great opportunity now for you to speculate and decide to go in long, to buy the euro versus the dollar. Now, looking again at the same level, why not? You still have the opportunity coming from all the way almost 2 weeks ago when it was trading at 116.60. It pushed higher to 119.08. Now we're trading at 117.85. So if we still think there's some energy that the euro has, we're buying these 126 pips lower from the high. Bien, okay? So that is minus 1.06%, minus 1% from the high. So we're not paying the full range. It moved from the low back in August. It moved up all the way 2.12%. Okay, so we're buying at this level. It won't be a bad idea to consider taking that opportunity. Okay, so that's what we have on the euro. And finally, if I take a look at the sterling, let's take a look at the Great British Pound versus the US dollar, another risk currency. We talked today about the Canadian dollar as commodity currency, the underlying asset. That means there's something good happening on oil, West Texas oil. Then something good may happen for those that are buying Canadian dollar. That's the idea. Now we're playing with risk currencies, the euro and the Great British Pound, the sterling. It looks like it's just slowing down. We have a recovery, big recovery back on May, the last week of May, and now it's slowing down a lot. Not too much to say. The reality is, if I look at the trend line, okay, let's take a look at the trend line from the top, and this is my expectation. Yes, you don't need to be a genius. You don't need to have a degree in finance to understand that it's not bullish. It's not severe bearish, but it's not bullish. Okay, it's under that trend line. Only if we see the price of the sterling trading at 138.97, then we'll have strong conviction to go all in and buy the pound against the US dollar. All right. So this is what I have for you today when it comes to currencies. Now let's take a look at US equity indexes. We're going to start with ETFs. Why ETFs? It's just to give you an idea what you can invest in. Okay, more than just analysis and stuff is okay. This is what we're looking at, and this is how much money you can make and how much money you have to understand there's at risk. All that, it's going to be based on the amount of money you have in your account and your risk profile. If it doesn't suit your risk, if that doesn't suit your risk, don't do it. There's no reason for you to risk your rent. No one is asking you to do that. There's no reason for you to, I don't know, skip meals. Unless you want to skip some meals, then okay. There's no reason for you to stop drinking your pints during the weekend, unless you want to do that. You also have to think what you want to do and where you want to be in the next 5, 10, 15, 20, 25 years. Maybe you want to actually cut on those extra pints on the weekend, just for the sake of knowing that next time you don't have to depend on the UK government to pay you for, £10 for a pizza during the weekend if there's another calamity like COVID-19. That would be a thing. But remember, everything is based on your risk profile, and everything that you see on Trade with JR may not be leveraged products, but at all time, remember, you need to invest at your own pace and only if you're ready to do that. Okay. Now we're looking at, let's start with the SPY. This is the ETF that follows what is the S&P 500 index, equity index doing. That's very important. Let me just switch to the US version. There you go. And as you can see, has been very helpful, combining Hawkeye traders trends plus stops. Look at everything that is showing us. Every time we have a dip to the dots, what do we have? We have a buy opportunity, and this is a massive and beautiful, super bullish trend in US stocks. So you may be wondering, where have you been? Where's this information? Why I didn't have this information? That's exactly, you didn't have this information because you're not subscribed to our channel, Trade with JR. So I want you to go ahead, smash the like button, and at the same time, subscribe yourself so you can get to know this. If you're in the UK, you must know this. If you're in Europe and you're watching this, even the replay, hey, you know what? This is happening. You deserve to know this, and you deserve to expose your savings. Not all of them, just part of your savings. Make sure you expose your savings to this type of opportunity. That's how you make the money. Okay, you keep yourself invested in the stock market. Now, last time we had a push in this area. Definitely, we see a bounce back from the 437 on this SPY. We're doing it now. We're actually testing this level. But then again, don't be surprised if we move to the next support level, which is 433. So between this level and this level, we may have another bounce and then target a new all-time high for US equity indexes. If that's the case, I'm just going to show you price rotation. I'm not going to explain much about it. This is one of the strategies I use when there's no previous cycle, previous liquidity back in the past, and the immediate pass of the asset. So now I need to project to the unknown. This is what we call price discovery. But to the unknown, I want to have some certainty. So if you want to have certainty and have an idea what to do when the price start breaking previous highs and making new all-time highs, then you need to pay attention to price rotation, right? So let's say it actually moves to this level. Let's say so far we have minus 1.69%. Like it or not, it's fairly only 7 points to the downside. But if it actually moves to this level, 433, that's 29 points to the downside. That's not the end of the world. That's just another support, another level where the market is breathing, just pausing. Okay, if that's the case, then 20 points to the upside. Once we return, will give us, all of us, a new high, and that can be looking at the ETF, Exchange Traded Fund SPY, trading at a new all-time high between October and November of 2021 at 474. Now, of course, if you buy the low, you're looking at an opportunity where you're taking home at least 10%. 10% sounds like little, but we come to 10% on your retirement account versus the interest rates that banks can offer you in the UK or in Europe, or what other products you can buy with the opportunity that in the long term you have that positive outcome, then you should definitely look into US markets. You take a decent 10% with minimal risk. You probably want to do this. If we talk about, let me just organize this. If we talk about risk reward ratios, this is a basic trade. Look at this. Probably we're looking at a 3% risk. Yeah, 3% risk to go for that 10. And that will give you a 1 to 2.80 risk reward ratio, All right, that's what we're looking at on SPY. And today I wanted to talk to you about the IWM. That's expressed on what we call the Russell 2000. It's another index in the US. It's the equity markets in the US are divided by indexes, depending on the quality, not just the quality, but it's more the market capitalization of the company, and also for how long you've been paying dividends. It's sort of that idea. If you look at the Dow Jones, those companies are very strong. If you're looking at the S&P 500, you're talking about the 500 companies with the highest market cap in the US. Then when you look at the 2000, Russell 2000 is more like the that particular index when there's a lot of companies that they have more volatility, right? There's more volatility, and that's what most retail traders go for. Big pensions, big insurance company, big investment firms, they look for the more established names. Facebook, Apple, Microsoft. There are other names, JP Morgan, Goldman Sachs, also banks are part of that whole thing. Maybe you can have a call of Pfizer, Johnson& Johnson, Visa, MasterCard. But the Russell is the one that gives you that boost. You're looking for a little bit of risk, a little bit of like, let me double, triple my money. Then you think about the Russell 2000. All right, that's what we're looking at. Russell 2000 here on MT4. I look at this information. Let me see if I can move this so you can see it. Oh, there you go. This one is a bit tricky. It has been working in this consolidation from February, first week of February of this year. Okay, let me see. Okay, consolidation from February during the first week, and it keeps moving. All right, keeps moving with different highs, and then these lows: 1, 2, 3, 4, 5 lows, defending the level 2000. It stopped the different retracements, different pullbacks, breathing opportunities. They're stopped at 2114. All right. And what we expect now is a continuation. So there are different strategies that you can do with call options, weekly call options. And of course, everyone is waiting for the big breakout. Now, other analysts like Steve from Profit Volume Alert, or I don't even remember the name of the service. Steve is managing one of my colleagues in the US. He thinks that we are just going to have a new low, actually. It's to be seen. In reality, we are in sideways market right now. That's what we're doing. We're in a sideways market, and we're just in the middle of the range. There's another version of the story that says because hedge funds are not performing, they're not really performing as they should be, there are going to be some massive moves, and they're going to start picking small caps to play their game. We'll see. We'll see how that goes. And definitely that has the potential to boost, why not, like it or not, the Russell. Our medium forecast for the Russell 2000 is for a new strong high at 3,000 points. That's on the Russell. But definitely like the first target I will have in the short term in the next 2 months, October to November, it will be a opportunity to revisit 2,356, which is the high back on the first week of March of this year. Okay. And then that will give you about 132 points to the upside. The risk, of course, is if we have another pullback and we go back to retest 2,100, which is the low. If you take a look at this level, excuse me, is the low back on the second week of August of this year. So we have to pay attention, but definitely an opportunity for long-term players looking for retirement rather than just buy different small cap companies. Then you can go ahead and easily you can take a look at the IWM. That's the ETF iShares Russell 2000. And at this point, it's testing the support at 221. But like I said, if we have that price range, my forecast, if it takes place from this level, you're looking absolutely with limited risk, you're looking at a 35.85% return on your money. Think about that ETFs are tools that they're being more popular than ever, and Business Insider, they promote it as wealth creation tools, right? But when we talk about these wealth creation tools, is like depends of your financial position. For example, if you have $1 million and you're looking into retirement with that amount of money, then if in the next 3 to 4 years you yield 35% of your money, that's way more than any bank, any financial institution. Could be in the UK, could be in the US, in the US, or even in any bank in Germany will give you. No one's going to give you for your savings or retirement account 35% of your money in 30 in 3 or 4 years. So that's something to consider. All right, great. Now we're going to move to the research part of the show, data, everything that we're talking. I'm going now to open all doors to talk about Osiris Ragnarok. This is our automated model. Our automated model, that means it's automated. It means there's no human intervention. Okay? I want everyone to understand this is not new. It has been in place for a couple of years. Robots and stuff like that has been forever. What I did is I took it to the next level, and the idea is at all time to show you how, rather than be afraid of the markets, how you can participate, always understanding the risk and always understanding that what we do at Trade with JR, they're leveraged products. Okay, so I'm gonna jump to um, data. Now remember, this is just data that we're accumulating from different brokers. Today I'm going to talk about Vantage FX. Sometimes you're going to listen to me talking about Robo Forex FX, Ava Trade in Chile. We're going to talk about also, like I said, FX Pro in Cyprus. You have to be open. I mean, absolutely, there's the regulation in the UK, and fine. But also, you are going to need leverage to achieve some of the goals that our data indicates you can with your money. All right, that's very important. We're not selling the EA. I want you to understand that we are not selling the expert advisor. You don't get the algorithm. You get a license service. We service you, and we provide the VPS, the servers. We provide the customer service, the tech support, and everything that you need to have while you're using it. We're offering a service license for a 12-month period. Only 12 months, not a year. It's 12 months, counting every month until you have 12 full months. Now, this may be shocking. This sort of task came out late, and I will share with you another account that we get from Vantage as far as the data. What can be done or not done. And I'm going to start with the risk, okay? I want everyone to listen what I'm about to say. Within a hypothetical $25,000, this could be easily, we translate this to 25,000 pounds, 25,000 euros. Our risk so far, the known risk is 35%. I repeat, 35%. Stop looking at the green. Don't look at the green. Look at the red first. Look at the worst case scenario. Remember, you want to know your risk profile. If you had 25,000 pounds, if you have 25,000 euros, $25,000, are you willing to take a risk on 35% of your money? You know that answer. Think about it. But then look at what is potential, what is on the table if you handle it correctly. Then we're looking within 2 months, we had a great July, a great August, and so far a decent September. And that means that within 3 months, using our technology, based on our research, you're taking home close to $24,000. Think about 25,000 pounds. Think about 25,000 euros. Yeah, that goes with a yield of 12%, 12.89% per month. But again, remember, never forget a 35% risk on your money. It's an investment. Now, the beauty is that it's fully automated. Fully automated. No human intervention. Don't call me. I won't intervene. It's the system. So while you're working, where you're going to your 8 to 5, nothing wrong with that. Nothing wrong with paying the bills. Maybe you're those that love your job. You love what you're doing. Then what's the surprise? Hey, but you do have money. You have some savings. You don't want to use all of them. You don't have to. Right? You don't have to use all your savings. And then you see something like this beauty, Osiris Ragnarok, right? And then you say, well, perfect. This is too blurry. Larry, it's too blurry. People cannot see it. They just can't see it, man. Let me see. Let's try something. Let's go with tools. Let me stop sharing. Let me just. There's something there, Larry. It's I don't know. Something's just too blurry, man, because they won't be able to see the data. It's not there, man. It's too blurry. Let me try one more time. Um, Here we go. Double screen. It looks good on the screen. I'm not sure when we have the video, when the video goes into HD on YouTube, if it's gonna be better because the recording is blurry. Let me see something. High definition, standard. Okay. Okay. Does it have the high definition? Okay, and now let me do this. No, it doesn't look good, man. Okay. So now we'll have to repeat this, but how? I have to think. Okay. I know. I think probably we have to look into doing it with Zoom tomorrow, man. Let me shut to Larry. So on Restream looks better. Now, so tomorrow we have to try via Zoom. You see the gear buttons. I might need to just pre-record, bro. To be honest, that would be better for post editing. Yeah, we can do it that way. But the live streaming has a little bit something better. I think we want to try this with Zoom. Zoom doesn't offer all the capabilities of Restream, but it doesn't look good, man. Like at all. It doesn't look good. Let me see something here. 64, 62. I don't know what it is that it doesn't work. Sorry, guys. We're working on this to see how we're gonna have it. I think we need to give a go tomorrow with Zoom, and see how it works, Larry. Okay? Because it's pointless. It doesn't look anything on the screen. No one is looking at anything. I don't know if that when we finish it looks better. We have to give it a go, right? So yeah, I was looking into this, guys. So sorry, it's not working very well. It's blurry, so I think it's pointless. So we're gonna come tomorrow, okay? I'm gonna come back tomorrow. It's just there is no sense to do this. So okay, perfect. Let me just bring myself back. So we went over this for an hour. Okay, a couple ideas. Look at oil, how the price of oil behaves. If we see oil moving from $70 to $74, Goldman Sachs thinks it may happen. We have a significant rally. No price given, but as we look at the levels, 74 is our next best bullish target. Now, when it comes to equities, we do know that there's an opportunity for the S&P 500 to keep moving a little bit lower. That doesn't mean the end of the world. That will be another pause. We saw that based on looking at SPY and working with Hawkeye traders trend plus stops. That's our technical tool on TradingView. Also, we do expect, I'm a little bit biased on expecting something good happening for retail traders from now to the end of the month, end of the year, actually. When it comes to the Russell 2000, you can do that trading IWM. That's the ETF in the US. iShares ETF Russell 2000. And of course, we started talking about Osiris Ragnarok and how you can just, take some of your savings, maximize them, and definitely automate it. That's what it is. That's the beauty. Not a new concept, but what we're doing is based on our database, based on the design that I created, trading currencies. It's going to be affordable in the sense of giving you opportunity to not invest so much time, reducing your learning curve, a little bit of less suffering, less stress involved. And if you take the risk, because we're working with leveraged products, then you have an opportunity to make a decent profit. I'm talking about a 35% risk so far on the known the last 3 months with our strategy. But at the same time, you have the opportunity on a 25,000. Think about this. Just imagine 25,000 pounds, huh? 25,000 euros, $25,000. Generate close to 90% of your money in 3 months. 3 months. We are here at Trade with JR to guide you, educate you, and offer you the technology and the data that you need to win in financial markets. I thank you for everything. We're going to come back tomorrow, probably an hour later. We're going to work with Zoom, see how it works, and see what Larry thinks is the best for us to go live with this information. We would love to have everything live. Probably talk to the risk stream people, see what's their suggestion and how we can do this better for all of you. As usual, Coach JR, thank you for everything, guys, and I'll see you tomorrow. Ciao, ciao.